Welcome back to Trade and Wait. Going to try something different today. It's not really that much of a difference to me. ES versus the SPY. I'm going to just analyze the SPY chart today utilizing ICT concepts. I did release a video yesterday, which I'm not too proud of, only because it's silent. I really enjoy having these discussions with you guys. I am under the weather, so my voice may go out or I don't want to get into that. So let's just get into it. What I did highlight here was this is the weekly chart. This is the 4-hour on the SPY. I really don't like SPY for this very reason. Like that versus maybe the continuous chart would be better too though. But look, yeah, I cleared up all those gaps. All right, let's see what we can do. Let's erase everything. Take off. Erase everything and take off. So you guys can hear me well. Looks like the recording is capturing my voice pretty well. Let's turn the news off for now. All right. Let's flip flop this just because. All right, look how nasty that looks. Anyway. all right. Let's get started. All right. Goal is to make money. Who cares what the chart looks like, right? As long as you can read it properly. So here you have this 3 drives pattern here. Kind of looks like 4 drives, but it's different. 3 drives pattern. 1, 2, 3. 3 drives pattern. Reversal pattern. It looked like it just bled out, right? Here we don't have that same. We don't have these higher highs being put in the market. All right. So in any case, we do have price rated in buy side here. We do have price identical, right? Rated in buy side here. So you can type buy side liquidity is rated here. You can utilize this swing high as well, relative equal highs. This is sorry. Sorry guys. Let's start over again. Let's go to the weekly chart. Weekly. All right. Start here first. All right. So if still that same what we did observe on the daily chart, we do have that more clearly illustrated here, where we have the SPY running buy side liquidity. So you can say buy side liquidity. Oh, I have to type out liquidity there, but buy side rated. In this case, this is the high that we can say. So you can say, hey, this level. So in this situation, I would just do this. I would highlight the swing high that was rated here and kind of drag that out. Right? Because you're looking for price to, ideally, it doesn't happen all the time, but this swing high that was taken out here initially, be looking for price to return back into that range, the range between the swing high that was rated and the high that was put in the market. So here we can kind of do the same thing here, but we can clearly see that this swing high that was put in the market on the ES was violated afterwards. So that's something, right? All right. So from there, so this is you can look at this multiple ways. You can even say this is a false breakout here, and this is a weekly chart. All right. And this is a weekly chart. So we do have a fair value gap here, along with a volume imbalance. And we can do this. See, it's been traded into here. And that would be weekly levels. Let's make sure. Let's put some more. All right, so similarly, we have the same gap up here. We got the open here, pull back down, took out that high. All right, but anyway, I'm gonna do this similar, not the same, obviously, we just discussed that, but if that's the situation, then does the same principle apply, where we are expecting price to trade back into here to some degree. Here we have a volume imbalance. The price traded into, dropped, and one here as well. This looked like it didn't look like this didn't trade into it. So that the close of this candle would be 590. Matter of fact, let me just do this. Yes. So not too far off. 597.34, 597.58. That's pretty good. Just got a whole bunch of gaps in here. Like, so got one gigantic one over here. Monday into, oh, these are weekly candles, so this seems more appropriate, right? The one way back here. But so anyway, so we have this violated fair value gap here. We have an order block here. The whole thing is an order block. I can not get into that. Not get too heavy. And got like purple. I'm gonna take that off. That lighter purple. The order block, and it respected the mean reversion of this order block. See that. So trade it here, pull down into this order block, bullish order block here, back up to this one, and back down. And highlight here if you wanted to. Effective, go back into that. That would be green. And this right here, since it's violated, we're gonna turn it into like a smoke gray. Anyway, whatever color you want, whatever color you choose. Yeah, this is like, SPY is kind of funky to me. Like, the charts are great. You can trade what you see. But here, in many ways, even this weekly chart is kind of much more clear in here, because here you can see prices in the trading, it's in a tight range. Like all of this is Let's see where the range starts at. We can even say like here to here, be the overall range. Let's right. All of this is the range. So this is the low, somewhere around here, whatever. This is the high, and this C price is gyrating inside of this range. And it very well could pull back inside of this range and still play around. So right now it broke. This when it breaks outside of the range, that's your external range liquidity. That's price targeting external range because the so let's say the start of this previous week, what was the range at the opening of this candle? What was the range? The range was from here to here. That was the range. So you want to say, right, like here to here was the range. Knew that was gonna happen. Right, that was the range. It's equilibrium. So let's see what that looks like. Right, valid. So valid. So you go. So this is the closing price the previous week, below 50%. So it's in a discount. So we want to take shorts when price is in a premium above 50%. And you'll see that that's what price did. Price went back above 50%. Then it dropped. Then it dropped. Went back above 50%. Then it dropped. Took out external range liquidity and traded into this fair value gap here. Let's see. Let's go down to the daily chart. What is all this? Get over my chart. Canvas. I can take that. I just did this. All right. Excuse me. I just did this too. Bum, bum, ba-dum, bum. That is hidden, but it's showing up here. Don't push me because I'm close to the edge. And with my emotion, Smokey. Oh man, am I glitching? Tweaking. That's a little. Yeah, it shouldn't be there. I don't know. Let's use this. Oh, come on, man. Come on, man. All this. Oh. Oh man, knew I was tweaking. All right, apologies, man. All right. Anyway, we can take that off. That's the range. We identify the range. You can clearly see the range better here. This low to this high, and this week, this low to this high. This continuation pattern probably was expecting price to return back into this balanced price range here. We do have a small fair value gap here, and then price back down, and we have this small up close candle. So when you expecting lower prices, then the up close candles should be like a form of resistance, pushing price lower. So we have that here, above 50%. We also have this as a mitigation block, previous order block, pushing price lower too. I ain't going way back there. You could though. Look how funky this chart is still. All right. So, yeah, chart is ugly. Oh man. Anyway, weekly charts to me goes with 4-hour chart. I mean, here it's nice. You can see short below 50%. You gotta violate it. Bullish order block. Yeah. Yeah. Don't judge me. I warned you guys. I'm not 100%. So all right, so we got a violated bullish order block. I still said it. We have a violated bearish bullish fair value gap, which is an inverted fair value gap. I know what I'm seeing is like, why are you saying the wrong thing? Anyway, that's violated. I think you gotta start documenting what we doing here. So that used to be bullish. You wanna say it's inverted now. Inverted bullish fair value gap. Make that bigger for people in the back. Okay. And turn that like cargo. So obviously, yeah, I'm like addicted to the ES chart, right? Like I'm gonna chart SPY, and then this got like hooked into like the ES still. I'm not even sorry. But you can see here that that weekly volume imbalance that we highlighted, how price is interacting with it. You can see. So sometimes when I'm like, I know what I'm looking at, you may not know what I'm looking at, or you may not know the significance of what I'm looking at. But I'm looking at like the high, the low, the midpoint. And then you start getting funky and you start like quarters, right? 25, 75%, right? And it's like these areas here. But in general, looking at the high, the low, and the midpoint as potential support and resistance areas or targets, right? So this is what I mean. Like you can see it like consistently. And this is the weekly volume imbalance. And we didn't choose the ones that were closer. We actually chose ones that were kind of, we got this one, and we got this one. Relevant still. Could have used it, right? This volume imbalance. Show, don't tell. I don't like these parallel lines. Anyway, here we go. Right? Right? Bam, right? You got price there. Okay, let's put it on there and just see. I'm going to take it off. But this is like, you got a tiny, is that a tiny little fair value gap? Nobody got time for that, right? Tiny little fair value gap here. Let's see what that does. See what that looks like later on. Make sure everything shows up in different time frames. What else do we see here? Yeah, that's good enough. Let's turn this line into like a black line or something to differentiate it, distinguish a little more. Uh, um, so let's take that off for now. So yeah, gonna use any of these. Totally respect it. And look at that little tiny fair value gap that was about to be ignored. Little tiny fair value gap, like holding price down. Like how ridiculous can this be? Like, let's go back. You see any other fair value gaps here? Well, you know, we had this technically highlight this whole thing. It will highlight this entire thing here, which is more, maybe much more appropriate. Let's see. This is the best time to be dramatic. So we're not live. So we're not live, meaning we're not in the market. It's not active right now. So let's take this off because we already seen that works. And this is the full. Let's see here. Like a chef in the kitchen, man. Feed me, Seymour. Quarters. Yeah, see? Talking to me. All right, so that orange line is the 50%. This black is a quarter. That's another quarter. You can see here, trade it back into that quarter. So again, like I mentioned previously, it's not necessarily putting everything that you see on the chart onto the chart. And it's also not, it's more so whatever your PD array is or PD arrays are, that you stick to those. You don't need to have all the volume imbalances on the chart. You don't need to have all the fair value gaps on the chart, right? But it's more so whatever you could identify that gives you edge, whatever you could identify that can potentially be a source of consistent revenue to you, without you kind of like, do I see it? Do I not see it? Do I see it? Do I not see it? Like we could have did the same thing with those two volume imbalances, or like I just incorporated that volume imbalance into the fair value gap. But that's literally, you say, why? Why did I do that? That's literally the only fair value gap here. And that's just the right thing to do, right? Liquidity void, this volume imbalance here. Let's see. Reminder, I already did that one. All right, so that's literally the only fair value gap here and the only fair value gap here. All right, let's leave those volume imbalances off. We did see that if that's your PD array that was golden, they work, right? Those were valid for SPY. This shouldn't be showing up here because this is a 4-hour level, right? And excuse me. All right, let's go back down, and this big black, turn that into like, make it, and you got the nice little black outline. That's good. Anyway, we can see here 4-hour, and again the weekly. Kind of skip the daily chart. You're already utilizing the higher time frame chart. Again, you could walk down on your own. That's fine, right? It's a lot of opportunities here. All right, let's see what was this previous week. Actually, all right, that's golden, right? Everybody got, but what did I see before, which is not on here, is this just thinking like, oh, how come it didn't rebalance this price range? But then you can just, you know, utilize this as a order block. Order block and then price back lower. Let's see if that will show. It's going to show. See if SPY has a similar. Yeah, I don't like SPY, man. I don't like the charts, but whatever. It's the same. You have to do. Same as here. You're gonna factor in the whole candle or the whole block, right? That's why risk management, thinking in terms of R, thinking in terms of R, right? Your entry to your stop loss. That's important, right? Because all of these levels may work, but where are you going? Like, how much are you going to risk per trade? How much of your account are you going to risk per trade? How much are you going to be willing to risk per day? How much are you going to be willing to risk per trade? All those things are factors to consider. But yeah, so over here yapping, right? But R, thinking in terms of R is like such a such a foreign concept. Like why didn't you tell me to think in terms of R before? Like you hear about it. Like Alexander Elder mentions in the new Trading for a Living, he mentions actually most of the mentors that I had, and yes, I'm counting everybody that I came in contact with. So anybody who had an influence on me, I'm counting them. So I don't know how you view that, but you should know three things before you get into a trade: your entry, your stop loss, and your target. Like when you're gonna get out. S&P Capital goes a step further, so to speak, and you should have written rules for um, reasons to hold, reasons to exit, reasons to add to your trades. All those things should be part of your trading plan, right? Then you got the 7 fundamentals. Let me see. Do I know me, man? You know me, man. Let me stop. You got the 7. Yeah, today's the 9th, though. Hold on. All right. All right, this is the news this week too. Just throw it out there so you can be aware. Tuesday, Wednesday, Thursday, Friday. Another thing I wanted to point out was like when considering like the weekly range, like anyway. All right, so like proper preparation, hard work, patience, a detailed trading plan for every trade. Here are some examples, right? Or if the stock trades in your favor, or where to take profits, and if partial or all, or where to add and why and how much additional risk, or if the stock trades against you or whatever you trade in. You need rules for that. Like, it's like, yo, let's say you in profit. Do you move your stop down to break even? Right? Pretty much your entry point, a little bit underneath. I'm thinking shorts. I love to see blood in the water. Price action moves way more faster when price is dropping than when it's climbing up. But so I'm thinking shorts here, right? But either, right, I'm thinking shorts. So, or break even, right? Do you put it exactly where your entry was, or slightly lower, so that way you can cover the commissions, and you make it slapped up with slippage too, though. So put it slightly lower, just to like you get stopped out, and break even, and you cover commissions. Then would you be worried about, like, yo, my trade may still be viable? That was this price running stops again. Can I get back in the trade? Versus, oh, I can't stomach that drawdown. I was just in profit, and I just gave everything back. That hurts. You haven't experienced that. That hurts. Makes you feel like kind of dumb. You may end up being depressed afterwards. I'm just telling you. But don't internalize your trading results. And this is one of the reasons why you don't really look at P&L. You don't look at P&L. You don't trade your P&L. But obviously, you can tell if you're in profit or not, right? Like, hey, I'm in profit. Price reached one of my targets, or price is drawing back on me. You don't have to wait for your stop loss to get hit to get out. You can get out. Lock in profits, shave some stuff off. Rather that's shares, rather that's contracts, rather that's whatever it is. How many times to try to trade and overall risk trades from your playbook? So, right, this is important. either creating playbooks or your book of charts, kind of like outlining your trades over and over and over and over. Like, yeah, I haven't went over this in a minute, but Six Thinking has Eddie DeBono. That's helpful. Something I'm reading right now is called Predatory Thinking. That's interesting. Throw that into ChatGPT and ask ChatGPT to break that down for you. Make it more actionable, actually, and see how you can apply predatory thinking to your trading. Part of that is also like thinking in terms of R2, right? Or multiples of R. Or multiples of R, risk to reward, right? So you want to take, you don't want to take necessarily symmetrical trades. Some people do one-to-one trades. Predatory thinking, you really want to get a real bang for your buck, right? You really want to get into those 1 to 2, 1 to 3, that type of vibe, right? And if you're thinking in terms of R, it's really easy to get like 2R, 3R, because your entry to your stop loss would be like it's already in a discount, and you aiming for premium. So if you're already in a discount and price goes to a premium, you're already up like 3R already. Like you can get out. That's good. But if price continues running, you're gonna end up getting like 10R trades. Like I'm not gonna say with ease, but it's, again, the game is a probability game. So, you know, it's a probability game. So you think in terms of R, you can move your stop up to 2R or 3R and let price continue up to 4 or 5R. So that way you get stopped out. You still up 3R. Like no? Like anyway, that's a point Michael Martin mentioned. It's like, yo, if you cut your wins at 1R, like 1-to-1, that's good in terms of discipline. But if you like, you'll never experience a 3R, 4R, 5R trade unless you made like a trading mistake, or like you couldn't cut it in time. Price that's moved that fast, right? You won't. That's okay though. Whatever you can be consistent with. Obviously that makes me excited to like the math. For so long, the math of trading evaded me. Like nobody wants to do math in the market. Just put the money in my bank, bro. Like stop playing. Like, right? That's the only numbers you want to do. Like number crunching. Like my account went from, if you're thinking like, oh, my account went from 500 to 2,000, or went from like 100K to 300K, that's good. Sorry, hold on. But if you go, oh, my account is up 2R, right? Your account started off with 100, let's say 100,000, and it went up 3R. That's good. Nobody needs to know. Like, what do you say? No one needs to know how much dough you hold, because you know, the cheddar breed jealousy, especially. Yeah, I'm fasting. Shouldn't be having those thoughts, but we talking money. Many of us learned about money from not the best of sources. So learning about money is also like, that's essential. That's important. Learning how to make money, learning how to keep money, important. Is important. You have to have rules. Who you share your success with too. That's another thing too, right? And to what level, right? I tell oh, I'm up 3R in my account. Yeah. Hey, there's no jealousy there. Man's is up 3R, man. I'm happy for you. Congratulations. Anyway, here's I get sidetracked sometimes, but here's the earnings for this week. I think the only thing that I'm like that I would even look at would be DocuSign. Everything else look like. Let me know what I'm missing, right? Let me know what I'm missing. Anyway, let's get back to it. All right, so this is that bearish order block. That's the closest thing, right? Remember, up close candles are supposed to keep price down if we are bearish. Excuse me. All right, but so we got this swing low as a target. Technically, we had the previous week's low as a target. We have this week's low as a target. We have this week's low as a target. And this is technically like relative equal lows, but didn't get quite down there. But we also have a, now looking at it, we also have a fair value gap here. Excuse me. All right, so we have a fair value gap here and a volume imbalance, but I incorporated the volume imbalance and the highlighting of this fair value gap. And we turn that green because that is a bullish fair value gap. All right, so I know you've seen videos from me, internal range, external range, but also ICT mentioned that you can go from swing low to swing high or fair value gap to fair value gap. That is also applicable. And you can see that here. And you can see that here. Fair value gap to fair value gap. But you can always say internal range to external. So whatever the rules you have to be consistent. And I'm actually trying my best to. I started this recording now. I didn't feel up to it, but I started it now so that way it doesn't interact with the market open at 6 o'clock EST here. But but anyway, let's drop back down to the 4-hour chart. All right, so now you can see like this is that. See level 59.8225, and what is this candles? 59.82. That's the candle's opening price. 59.82. That's pretty good. Order block did its thing. I'm gonna take it back off because too much going on there. Excuse me. All right, so that's a weekly. Is that a weekly level? The weekly level. Fair value gap. 4-hour fair value gap. If you didn't use that weekly order block, you could use that inverted fair value gap here. So that's also, so again, thinking about let's take this back off. That's the range that we identified. But now on the 4-hour chart, you say, oh, what's the range that price is currently in? What's the dominant range? What started this down move? What started this down move here? There you go, optimal trade entry short. And I do believe 5673. This is 5673.50 for one standard deviation. We do have a rule. For me, I have a rule. I don't know about you. For long wicks. And this is for projection purposes, so, and entry strategies. So you can do that. Anyway, that's your optimal trade entry short. This is your one shot, one kill for the week. Trade it back inside this range here. At this 4-hour fair value gap way back there. Have a run on stops. No, market structure shift is here. You have a violated inverted fair value gap. I'm gonna take that off. Obviously, we know we can use that, but let's see what's A plus trade setup is. What? Take this off because you know that optimal trade entry was valid as well. So you have a run on stops here in this candle. Swing high or this relative equal highs here. And we have the break of market structures here or here. So market structure shift. That's your market structure shift here, and we're looking for price to retrace. Let's just use this. About 50% of the range into an imbalance. So this is above 50%. Where is the PD array? You could use this these order blocks. Or you could use an inverted fair value gap. And that's what I would prefer. So that's what I'm going to use. Here and right? That's that little, not that little, but on this Wednesday, February 26, 2200 hour candle. Inverted now because it's been traded, been violated, traded back into it here. Why? Right? For one thing, it's the only fair value gap here in this area. But two, you can see here, it's violated here, traded back into here on the February 27th at 10 o'clock candle, traded back into it, caused it to go back down. You see it here, reacted to it here, see it again, almost interacted with it here, traded back above it, should have held a reclaimed fair value gap. It didn't, it was violated again. So and then we can see like other entry models, but that's, as you saw, it's optimal trend entry short into this, and you can see into this weekly level. Hopefully that's a weekly level. I'm not making up stuff. And we can have this fair value gap as, let's make sure that's a weekly fair value gap. It is. Could name it right. All right. Get rid of that. Go back down 4 hour. And you see this is this level. You have this order block here, traded into it here, drop back into this imbalance. But that's the A plus trade setup, right? A plus trade setup. What's the rules again? It's the same rules every time. Where are we? What are you doing? The same rules every time, right? It's A plus trade setup. And this is like the 3 core rules. Obviously, S&B Capital detailed trading plan, there's more you need to elaborate, but this is enough to get you in and out of the trade. You know the rules here. So technically this would be the protected high, so you put your stop loss here or above the candle that has the imbalance in it. This is where your stop loss would go, here or here. So like you think like optimal trading, like I didn't have to use this candle as an optimal trading. You could use this one, but same story. Treat wicks like gaps. Treat wicks like gaps. So this was a reason to short here as well. You just use that as a, this as a gap, this wick as a gap. Remember, the bulk of the volume for the candle. The bulk of the volume is in the body of the candle, it's not the wick. So that's another thing, right? You can see price here didn't run the swing high. It ran the bodies of the candles, and it's pretty much respecting the bodies of the candles here. That's a side note. But anyway, so we have a run on stops, do a market structure shift, 3 a pullback to pullback above 50% of the range into an, you can see on PD array. I say inefficiency all the time because not everybody know all the PD arrays, and sometimes if you don't see what you need to see, then that trade's not for you, it's for somebody else. Right? It's okay. You don't need the entire range. You don't need to You don't need to catch every trade. That's not for you. Only worry about what's for you. Pull back above 50% of the range into an inefficiency of PD array. And that's pretty much, I don't like this like vomit looking color. That's the A+ trade setup for you right here. That's the go-to. So this is your short entry. And then there's this like, and this is how, so let's say you didn't see this fair value gap. Here, this is the previous week's low. So let's say, oh, it traded into a weekly level. I only want to deal with weekly levels. This is the weekly previous week's low. Yeah, that's the previous week's low. That is a retest. Retest that low into this mitigation block that's violated. Right? You can, anyway, so many things you can use. Don't worry. Don't worry. If you don't know, you don't know. Don't worry about it. All right. Where were we? That's that. That. Oh. And then I'm only going here. Yeah. Anyway, and look for entry models. We already had the 4-hour entry. We had the 1 shot 1 kill weekly range, and then we can do some intraday price action trading utilizing these high time frame levels. And that week started on the 3rd, so that's right here. And the same concept applies here. Short here, retest, fell, but it's an imbalance here. Here's your entry, right? Here's your entry here on this. So yeah, 1 entry here, 930 on this inverted fair value gap here. And obviously we have a high time frame analysis. We already had that. So we have the pre-market 7 o'clock. Have an imbalance here. Come on, what are you doing? All right, so you had that imbalance there. Let's just make that negro black. Let's make it black. My Spanish skills are not that great, so. But yeah, you can see price like, right, bam, like retesting that right there, 15-minute. You can either use that 4-hour quarterly level or violated bullish fair value gap. Bam. Then we have another. Either use those over here or this here, and your stop would be above this candle here or above here, and then consolidate it and drop some more. And this is the completion of a market maker sell model as well. That's a sell model. So that's something to consider as well. So you have, not get too heavy. That's the 3rd short into this imbalance, inefficiency, the weekly. That's a weekly fair value gap. It was used as support here, violated here, unable to hold here, and it's your short an opportunity. So you have price running below previous day's low. You can see here. So previous day's lows and highs is our PD arrays as well. About to end this because it's almost an hour and my voice is not, well, my voice is good, but my throat is kind of like scratchy. You can see previous day's low, retest here, short. And you have this. Well, I'm not all over the place, but all right, that's your short. Here's your continuation, retracement into this order block. That's this up close candle. Short or previous day's low, short continue, rebalance that. So that gives you, it fails here, it runs up, right? This candle opens here, runs up, rebalances that. That gives you even more interest in going short. Then again, you can see price is just, right? You just, from here on, you just utilize previous day's high, previous day's low, any types of imbalances here. Got an inverted one here. Cause this price to go up, trade it back into here. Cause this price to go down, targeting this swing low. That's all it got. Then you got an imbalance here. Price traded up here, traded back into it here. No, not quite. Not quite. Took off. Let's see. 575.85 and 575.82. That's good. So it did trade into it. All right. So that would be an inverted fair value gap. Trading back into here. Run on stops. Got a break in market structure here. Here's your order block. This is all aftermarket, pre-market information. Use displacement here. You can utilize the previous day. Let's say you ignored all of this, which is not necessarily, this is the real-time data. So it's not, you in many situations, you don't have to use this data here. If that's not, but again, you have to be consistent, right? Don't just pick and choose. I'm not gonna bother changing the colors because I'm trying to get out of here. And Friday, and price open up is inside of this range. This ran stops. And this is a continuation, right? This is a short, pullback, short, up all that, pull back into premium, short. Again, this is like, let's see what we got here. So this was the target, right? Weekly draw on liquidity down here. So this gives you permission to go short, and you're going short, regardless of this breaking market structure, retrace. There's no fair value gap here. Got an order blocker here to here. See that traded back up into that. It's just running above the Asia high. But again, let's say you're gonna ignore real time and only use real time data. All right, there's your short here. Retracement back into here, running these stops again. Or you treat the wick like a gap. Short targeting here, and targeting the weekly consequent encroachment. You target here, and then you see more selling pressure to go lower. I think I redeemed myself from yesterday's quiet session. Again, I apologize, and I appreciate you guys for listening and watching. Please like, comment, subscribe, and yeah, get to the bag.